about 3 weeks or so, we got about 6.3R or so. So it is a profitable strategy during this period. Perfect. All right. Well, yeah, thanks everyone for joining today. Hope you're having a good week, good end of the month, February, starting March now. I'm excited to share this new model one of our users shared with me recently from Blackwatch. He was previously I guess trade coach at Phantom Trading, and he's got this really cool kind of break theory concept where he uses Heikin Ashi candles for his actual entry model. So it's first time we've had an entry model using those candles. It's a little different, but pretty cool model that seems pretty promising, and excited to share it with you today. So yeah, I linked the strategy PDF in the Discord for those of you watching live, and then if you guys are catching this YouTube later, you can check the description and we'll have a link to the strategy PDF as well. You can grab for free. So yeah, this strategy in general, we're going to be testing kind of with two different time frames. The 4 hours is going to help us determine what our high time frame trend is. We're going to be using the 5 minute for our entries. Today we're specifically going to be trading GU, or if you're trading futures, there's a 6B1 pair you could use as well. And the kind of time period for this is a little unique as well. It's basically from a little bit pre-market, so it's kind of 2 hours before the New York Stock Exchange opens until kind of I guess early afternoon New York. This kind of pre-market New York to like kind of the first half of New York Stock Exchange open. And you can trade this strategy on other pairs as well. I believe Blackwatch trades it on NASDAQ. He trades it on multiple Forex pairs as well. So you can kind of play around and backtest it on different pairs and kind of see how the results work. I think if once you get good at it, you can actually potentially trade this strategy on multiple pairs at the same time. If you get good at identifying it. But yeah, basically like super high level break theory in general is not like a super complicated process or thought process. It's been around for a while. It's essentially this, rather than getting super worried about finding supply and demand imbalances, trying to guess where price is going to turn around. So we're basically just going to be looking for in an uptrend kind of previous resistances to be retested, expecting that price will then kind of give us a reaction and provide continuation to the upside. And then vice versa in a downtrend, we're going to look for previous supports that get broken to the downside. And after they're retested, we are again expecting continuation to kind of fail these lows on this 4 hour time frame. So that's like the very basic theory, and kind of the only nuance beyond these kind of 4 hour highs and lows. We're also going to be looking for inside bars, and I'll kind of show you what I mean, because obviously real charts don't look like this. So I'll kind of show you what this actually looks like on a real chart. So I have marked out this GU chart where you'll kind of see we have a local uptrend and a local downtrend, and it took me a while to figure out kind of how I wanted to simplify this for you guys to be able to identify these trends as easy as possible. Like there is quite a bit of subjectivity, technically there's a low that's, a candle closes here. Do you consider this the start of a downtrend? And ultimately I found this super trend indicator that's on TradingView and FX Replay. And honestly, this makes it simpler than anything else I could find. So we're going to simply just use this super trend indicator to help tell us very simply, like, are we in an uptrend or a downtrend? And it kind of helps take out a lot of the noise and guesswork, trying to like constantly map these 4 hour highs and lows. We're simply just going to follow what the super trend indicator is saying, and that'll kind of give us a really good idea where price is generally trending kind of in the most recent 4 hour price legs. So I'll kind of hide it just so it's a little easier to see. And so overall, as you can see, kind of the two things we're looking for is in an uptrend, I'll zoom in a little bit so you can see a little bit better in the uptrend. So after price has kind of failed a high in an uptrend, we're only interested once one of two things happens. One, price either comes back below that kind of previous failed high because we're expecting continuation, or two, if you look at these inside bars, these kind of white candles, and both FX Replay and TradingView have these inside bar indicators. I think this one is just this inside bar V2 or something I found on TradingView. It helps you just basically identify these inside bars, and all they are is essentially the open and the high, low, and close of the inside bar is inside of the previous candle. And so one thing that Blackwatch mentioned is a lot of times during trending environments, you'll see a sweep of these inside bar. Obviously in an uptrend it's a low. You'll see a sweep of the low followed by a pretty impulsive move to the upside, and it happens again on this next one. The wick is all the way down here. we sweep that low and then get a pretty impulsive move to the upside. So kind of two different things we're interested in, either price returning to a previous high or kind of sweeping a inside bar low when we're in an uptrend. And then at that point, we're going to zoom in on the 5-minute time frame and actually start looking for entries. But I want to just kind of establish this general kind of high time frame. What are we generally trying to accomplish first, so you guys kind of understand that. So again, we'll look at some examples in a downtrend. Again, just going off the super trend. Maybe it's a candle or two late, but ultimately kind of tells us, okay, switch your bias. We're starting to look for shorts now. And at that point, you start mapping out the failed 4-hour lows. So you can see here, we've got a low here that was swept. And again, price revisits it. That's when we're going to start entertaining kind of shorts, looking on our 5-minute time frame to see shorts. Ultimately, we're expecting price to continue down, but generally, we're just kind of looking to catch moves in line with the trend with this Heikin Ashi continuation model. And again, there is a couple inside bar examples in this as well. You can see this kind of white candle here. We sweep the high and then move to the downside. I see there's another example here, inside bar right here, swept it and then kind of moved to the downside again right here. So these inside bars, basically our kind of first thing we're going to be doing with this model when we come to market is kind of marking out the 4-hour failed highs or lows depending on the trend, as well as the potential like inside bar levels. And as you're using these trend lines, you can change the colors, whatever you want, but there's also the way if you come into the kind of settings here, it's right next to the like how thick the line is. You can change the style and you can use dashed lines, dotted lines, whatever you want to just kind of differentiate the coloring of your lines, whatever works for you. So now that we have the kind of high time frame charts kind of established, let's talk about our actual strategy details. And so after we come to these levels, say for example we are in an uptrend and we have either revisited this kind of previous high or we've swept an inside bar low and we're looking for longs in these areas. We're going to zoom in on the 5-minute time frame and we're going to apply breakthrough theory as well to the 5-minute time frame. The only difference is we're going to be using the Heikin Ashi candles on the 5-minute chart. And if you come up here both on TradingView and FX Replay, it's just right next to the time frame. You can change the candles from just regular to Heikin Ashi here. And for those of you unfamiliar, Heikin Ashi candles essentially just show you the average price kind of during the candles. So it clears up a lot of the noise to help you identify trends more clearly. And it's kind of same thing on the 5-minute time frame. We obviously want to see body closures to confirm kind of these kind of failed highs in an uptrend. But same thing as the 4-hour, we're going to be kind of waiting for price to revisit a previous high. And that's kind of that's like the first condition before we look for a long. And I guess the kind of second thing when you're on this 5-minute time frame is we have to see the Heikin Ashi candles changing colors in order to mark out a new failed high or low. Like this is probably about as good of an example as I have. We're technically in an uptrend here and we have a kind of higher wick here. You can see, I don't know if I can zoom this in just a little bit more. We have a higher wick here, but there's no candle coloration change, so we couldn't mark out this high right here as a new high. We would need to see those candles changing color and then kind of coming back up to mark out a new failed high. And then the actual entry model, I'll kind of show you guys in just a moment. But basically, after price revisits that 5-minute high, we're just simply looking for a change in candle color, and that's going to kind of give us our confirmation to enter and kind of hop in on the trend. Specifically, I'll kind of show you guys in FX Replay. I have kind of example right here. So this is the same, this is right here, kind of this, we've broken to the upside, we've retested this kind of 5-minute previous high, and now we are looking to potentially enter. And so there's kind of two things you want to do in this case. One, we're going to be basically using the fib retracement tool from kind of the recent 5-minute high to the low. So from left to right, this low right here to this high. And the settings we're going to be using for it, I'll kind of pull them up so you guys can see, are basically the 0, the 1, the negative 0.25, and the negative 0.95. And as you can see, I've kind of mentioned here, this negative 0.25 level is generally where you're going to go break even for the strategy. And this negative 0.95 is going to be your primary target for this model. And so that's kind of the first thing, to kind of map out your potential kind of targets and trade management. And then the second thing we're going to be looking for is that kind of candle changing color. And so As you can kind of see, we've kind of had a bunch of red candles. We've tapped in this 5-minute time frame, and we wait for a candle kind of changing colors. I do have a note in the strategy PDF. We generally want to avoid dojis with this model. So even though this was technically the first green candle, we're going to wait for the next one. That's actually like a, it's not a doji, to kind of give us our entry. And in this case, there was actually we had to take 2 attempts because you put your stop loss at the kind of retracement low. Unfortunately, barely got wicked out in this case, but then we had another potential entry right here. So it's totally fine to take kind of 2 attempts if you barely get stopped out and then get a subsequent entry. But really the last piece of this is the VWAP. So over in your trading view indicators, in this kind of long short position tool, there's this anchored VWAP, and essentially all it does is helps you kind of see what the volume weighted average price is. So it takes into account volume as well. And kind of the last piece of kind of confirming if we're actually going to take this trade is the same low that you put your fib retracement on. You're going to place the VWAP. So you can favorite it and then kind of use it as a drawing tool. You click it and then you click this recent low, and it'll show you kind of some average levels. And again, I'll kind of show the settings for this so you guys can see. I have all 3 band multipliers checked, just 1, 2, 3. These are standard deviation. I think it's pretty much the defaults. And then I basically uncheck everything except the lower band and the upper band. We don't need all these other ones. And really the last piece of this model to confirm that you can actually enter is that candle that closes back in line with the trend. It has to close above the midline of the VWAP. And so it kind of helps you if the trend is kind of pulling back too much. Essentially, it keeps you out of those trades, which are more often than not going to be losses. So to kind of recap, we have our we've come to a 4-hour level of interest that we're interested in kind of hopping in on the trend. We've zoomed in on the 5-minute time frame, applying break theory to the 5-minute time frame. We've retested a previous kind of higher low, depending on the trend, and then we've waited for a candle to kind of shift back in our direction, both that lines up with the VWAP, and we kind of project out our levels. So after we kind of get our entry, like I said, we're going to be using it's either going to be a market entry or a limit entry. So with the VWAP, and I'll actually kind of show you guys exactly what I mean with this. So since the Heikin Ashi candles are based on price averages, when the candle closes, you're actually not going to see the exact same the price is going to be a little different based on what the Heikin Ashi candle is showing you. And so I'll show you this right here. I have in my account settings for FX Replay. So there's kind of a trick to see the real price as well. So if you go into your account settings in the backtesting section, turn on this show ask line. And if it's easy if you don't have any spreads or anything, but this just helps you see what the actual price is right here, in addition to where the Heikin Ashi candle closes. So even though the Heikin Ashi closed right here, the actual price is all the way up here. So in this case, we would obviously need to use a limit order. Sometimes the price will close kind of, I guess, technically below your entry point, and you would need to use a market order. But basically, you'll be able to kind of see where the current price is based on compared to where the candle closes, and that'll like tell you if you're going to do a limit order or a market order. So I would use a limit order in this case. Once price comes back down here, I would go break even once price gets up to here, and then we would be targeting out this negative 0.5 TP. So that's kind of the basis of it. I'll go over a couple more examples on the chart so we can reinforce this, and then we'll start backtesting. So I have a couple examples. I've got the 5-minute time frame here, and I'm just going to show you guys kind of an example within this chart after price has swept this inside bar low. So I'll kind of shift over my 4-hour time frame to zoom in on the 5-minute, and we can see here we've kind of recently just swept this inside bar low, and so we're waiting, number one, for a kind of 5-minute trend shift in line with the trend. So as you can see here, we had this high that we got our nice break above, giving us our kind of 5-minute trend shift in line with the direction we want to go. We then have price revisiting this kind of 5-minute high, or this previous 5-minute failed high, which is kind of our second piece. And then lastly, we look for a candle to close kind of back in the line with the direction. That gives us our entry. I'll place the VWAP on the low, and we can see that it did close above the midpoint. So we have everything we need for a valid entry in this case. We would go ahead and enter after this candle closes, put our stop at the retracement low, and target out this negative 0.95 level for our TP. Obviously, in this case, you could have gone a lot higher with your take profits, and that's kind of one of the optimization considerations is either going for kind of more swing targets, looking for those 4-hour highs instead of just the kind of negative 0.95. You could also kind of take a partial there and then kind of trail the rest, and maybe wait until you see a candle change your colors or something. But we're generally going to be kind of just looking for smaller trades in the backtest today, because it's still like 3-4 hour. It's still a pretty good amount if you can catch that more often than not. So this is kind of the first long example I wanted to show you guys, and then I have a short example over here. We've got price and downtrend. We kind of revisited in this area, and we're looking for shorts. So let me kind of find where that example was. So it's over here a little bit, right here. All right. So again, we don't know how far price is going to kind of return here. So this really just makes it easy on us to just wait until the trend shifts. And then that's kind of when we look to enter on those continuations. I'll remove this border. It's just a little easier to see. All right. Oops. Okay. So again, we've kind of come to our 4-hour area of interest. We've got a shift on the 5-minute time frame with these Heikin Ashi candles. We got body closing below a previous low. We have a candle retracing back to the kind of the level in line with break theory. And then we have a kind of candle closing back in line with our trend. So the last thing, as long as the VWAP works out, then we should be good. So place it where I put the fib tool, kind of recent 5-minute high to low. We did close below the midpoint, so we have everything we need to enter this trade. And then again, we'll use the kind of retracement high in this case for our stop loss. This one actually might have, no, it didn't get break even. So you would have gone break even here. So it wouldn't have tagged you out break even. But yeah, you basically would have entered on this next candle and then kind of rode it out to the next target. And again, you could have potentially used a little higher time frame, caught a little bit more in this one, but still 4-hour on this trade. So if you can catch 3-4 hour trades, every at least half the time, honestly, then you have a pretty good edge. So let me see. Feel free if there's any questions. I know this strategy does have quite a bit going on, especially with the Heikin Ashi candles. So if you guys have any questions, feel free to ask in the chat at any points, either now or while I'm going over more examples. But let me just make sure I've covered everything. So we talked about the VWAP, price closing above it. Had to take a couple attempts at this one, but that's all good. Go break even after this negative 0.25, and you guys can use the price at this level, or it's usually around roughly 1.5 R. So kind of up to you guys if you want to put it the price or just 1.5 R for simplicity. I'll probably be putting the price to more accurately trade it today, but yeah, we talked about it's going to either be a market entry or limit entry depending on the actual price. We talked about go and break even at that negative 0.25 level. So a few other things just for some kind of invalidations and just other rules in general. So in general, you obviously want to avoid any price action where there's no clear trend. So when you're looking at these Heikin Ashi candles, let me see if I can find a time period. It's price is kind of just going red, green, red, green, red, green, red, green. There's no clear trend. You really want to see where there's kind of nice flowing kind of candles in the direction of a trend, which is generally more higher volume periods. This is probably out of session anyways. It's generally when you'll see kind of that more choppy PA. Same thing if there's highs and lows getting wicked kind of both sides, no clear body closes or direction, kind of just avoid that. And then the last thing, if price is trading around your high time frame levels, so I guess I can look at this 5-minute time frame and try to see this, kind of price is around this 4-hour point of interest, this previous, I think it was a failed low in this case. And it's kind of just has some indecision here. It's shorts and longs are kind of fighting each other. So even if there is a potential trade from the model, if it's kind of right around a point of interest, just passing those trades, it's better to kind of wait till it either clearly breaks it, or again, if we're kind of just working our way up towards that target, it's going to be higher probability than trading right around the point of interest. I already mentioned, has to close on the correct side of the VWAP midline. We're going to ignore wicks. or I guess, yeah, dojis. This should say dojis. When there's basically 90% of the candle is a wick. These are not valid entry candles. It's okay to take 2 attempts. And then let's talk about news. You generally want to avoid trading like during high impact news. I guess the only difference in this case is if you actually get in early and maybe you're going for more of a swing target, you're able to kind of protect your stop at entry, or you have some buffer between your entry, and you could potentially hold through it to see if that news event kind of propels you to those higher swing targets. Kind of an optional thing, but in general, we're going to be kind of avoiding the high impact news for this strategy. So we've got our trade checklist. Again, seems like kind of a lot, but a lot of this is kind of pre-work. So as we kind of come into the session, we need to map out our 4-hour highs and lows, the inside bar levels, and then we also gonna want to make sure that price has at least revisit a previous 4-hour high and low, or the inside bar high and low. And at that point, this is kind of really when we're kind of locking in and focusing on our 5-minute entry model, where we're going to be looking for that 5-minute shift in line with the trend and revisiting the previous level. Going to double check for any invalidations. Make sure we have a close on the correct side of that VWAP midline, which will be our entry. And then we'll either target that negative 0.995 fib, or if you want to go a little more aggressive, that 4-hour higher low, and we'll go break even after that negative 0.25 fib. So, all right, so let's go ahead and dive into backtesting the strategy some on FX Replay. As you can see here on the right, I've got my 4-hour charts and a couple indicators. I've got the inside bar by FX Replay, which is going to show us those inside bars with the white candles, and then the super trend, which is overall just going to help us loosely identify the kind of 4-hour trend. And then on the 5-minute time frame, all I have is this session indicator. I've got it set from 7:30 to 1300 New York time to show us kind of the hours we're going to at least trade today. You could potentially trade London session, the full session as well, but that's what we're going to do today. And so yeah, first step of our trading checklist is to kind of map out the 4-hour highs, failed highs in this case, as well as potential inside bar lows. So since we're in an uptrend, so we'll go ahead and do that. We've got this high over here that failed, and I'll use solid lines for the highs, I believe, and dotted lines for the inside bars. We've also got a potential inside bar here that we sweep this low. Could also give us an area that we could be interested in longs, and that's honestly pretty much it. We'll see more develop as we backtest, but to start out, that's all we want. And so the first thing is I need price to visit, either below this inside bar or below this kind of previous high, and then I'll start looking for longs. So go ahead and go to the 5-minute time frame and look for play things forward. So we got a nice revisit of this low, so now I'm looking for a 5-minute shift. We do have some news, but nothing crazy. So we are probably still fine looking to trade this day. I don't see any body closes yet, so no clear shifts yet. Let's look kind of just chopping around, and then we finally get a nice directional shift. I don't have too much time left this day, but we'll see if we kind of visit, honestly, either below this, now that we failed this high, we could kind of just come below this level and look for long, or if we revisit this 5-minute low as well, that would be another good area. But yeah, with all this chop, there's never really any clear body shift. There's a lot of wicks taking highs, but no kind of clear structural shift, so I wouldn't have honestly used any of these as kind of a clear shift on the 5-minute time frame. And yeah, probably no trades, but got everything mapped out, and as we expected, price did continue to the upside, just didn't quite fit the criteria for our model. So going on to this next day, we have a couple different levels here. We still are above this kind of previous failed low, so we're good to look for shorts. We also have a recent inside bar. Oops, I grabbed the wrong trend line. Inside bar high right here. Make this dotted. So we've got an inside bar sweep as well, which adds a little extra confluence. Let's double check this news that's coming up. We have PPI and retail sales. Usually these aren't as impactful as like CPI, FOMC, and non-farm payroll, but just something we need to, probably don't want to be entering a trade like immediately right here. Looking at our recent price structure, we did have a shift to the downside, and we did actually have a potential candle close here, but a little before our session, so I'm not going to chase this one. I'd rather look for kind of a fresh setup. So looking at these lows here, we get interactions, we could look for potential shorts. So kind of doji candles, I would prefer something stronger, so that looks a little bit better. The recent high to low is a little subjective. Maybe this one right here probably looks the best. might not give us the best risk to reward. So we're expecting a pretty violent move after the sweep. So let's just go ahead and use kind of this more obvious high right here. And double checking the VWAP, I'm pretty sure we'll be well below it, but always good to just verify. So we'll short at this level. The top of the retrace was right here. And we're going to target this 3.78 level down here. Place order, auto break even at this 1.2804 level. And see how this one works out. Awesome, nice win. So tagged this in to our take profit a little bit before the news. So this is an example if you're going for a larger swing. Since we hit our main take profit, you could potentially take 50% off the table, collect a little over 1.8 R, I guess, in this case, and potentially hold for deeper targets. Because this news is going to probably propel price one way or another, just out of curiosity, kind of see. So yeah, you could have caught a little bit more. Ultimately only came to these kind of local lows here. You wouldn't have been able to catch, these major lows, but could have held it for a little bit longer if you were kind of looking for that next level. Maybe caught the rest at 5.7 R. But in general, I think just going for these base hits, that's usually works over time. So if you just stick with that, then that's probably fine. Let's see if we get any more trades this day. Obviously, a little volatility after the news. We do have a new kind of structural sweep here. Or it hasn't quite swept it yet, but now we swept it. So if price visits with a green candle, we could look to enter. Didn't really get any green candle, so no entry, even though there was a slight pullback. So we have another low here. And again, since price has already kind of come into this level, we are good to just kind of ride this down now, because we're expecting price to eventually kind of come all the way down to this previous 4-hour low. So again, if we were swinging, you actually would have just gotten stopped out, unfortunately, with the news. But it did. We have the right idea, right bias, which is the main thing, and we want to just try and look to enter in line with the trend when we can. So let's see if we get any valid entries right here. Perfect. So we get a really nice one right there. We use the most recent high to low. We're basically kind of targeting that low, which is kind of what we want. Let's see, does at least give us 2R? Yeah, just over 2R, so I'm okay with that. We might not get tagged into this one. You can kind of see the current price is quite a bit away from the Heikin Ashi candle, so this one might tag our take profit without us, but we're going to use a limit order and just see if we do get tagged in. We'll just put the levels as what they should be. 1.2756, 561, and see if we get tagged in or not. All right, yeah, so price has already gone to our break-even level. So I'm probably not gonna wait and see if this one will enter us in, because we would have already been break-even at this point. Yeah, it runs to our take profit. So unfortunately, just didn't catch this trade. But again, right idea. And when we do get tagged into more of these, as long as you have the right idea, that's kind of what gives you the edge. So that's the important thing. Even if you feel bad, you didn't get all these, you didn't catch this whole move. At least we got one kind of nice 3.78 R win. And if you were kind of doing a swing, yeah, could have potentially got more. So I think that's probably it for this day. We've already hit our targets. We're pretty extended now at this high. I'm not going to continue to look for just shorts just because it's lower probability. We're kind of expecting some kind of reaction to this low. So probably best to just wait for the next day at this point. Yeah, we kind of just chopped around that level for a while. So we are back above this previous low. We also have a inside bar level right here that I can kind of mark out for extra confluence. We've kind of been forming equal highs, so I would love to see this inside bar swept before I move to the downside. We've got some consumer index news, which isn't huge, so I'm pretty comfortable with that. I want to, like I said, I really want to see this level get swept first. Perfect. So we've just barely tapped into this inside bar level. Now I want to see if we get a 5-minute shift, which we get right here. So body's closing below previous 5-minute low. Now let's see if we can get a valid entry with our model. Looks like price kind of went up a little too high. Just to show you guys, if we applied the VWAP here well above the levels, I guess technically, now that I think about it, if I'm using the most recent high, yeah, we actually did close below the midpoint on this. So I think this is actually a valid entry. I'm just not sure it's going to give us the best risk to reward because it retraced quite a bit. So still over 2R. So I guess this is valid. I thought it had pulled up too far, but since this candle closed pretty strongly, it looks like we do have a valid entry. It might again run away without us because price is quite a bit away from our entry, but let's give it a shot. Limit order. Yeah, if we did a market order, just curious, we would only get 1.6 hours. So yeah, we definitely want to limit order. Auto break even at this level right here, 1.2738. 38. See if we get tagged into this one. All right, perfect. We got tagged in. Kind of chopping around a little bit. Stops to break even now. And we ran to our take profit. Nice. So a couple wins these last couple days. Let me see if there were any additional trades, because while these are running, you can potentially look for additional trades. All right, so I'm going to do my best to record all 3 of these trades, just clean it up a little bit so you can kind of see the levels a little bit easier. So we've got our first trade here, had a 5-minute shift, retrace and close, and we confirmed that this closed below the 50% of the VWAP, so we're good to enter here. So I'll place my order, sell limit, auto break even at the negative 0.25 level, which was 1.2738. 738. So let that one play out for a little bit. Then we got a new low here on the 5-minute, and our initial trade is already break even. So this one's already protected, so we can go ahead and look to enter potential additional ones. So we got a shift back up to into this level with a green candle, and then a red candle for another potential trade. So I'm just gonna move this a little bit out of the way so it's a little easier for us to see. So new short right here. Stop at the high. I drew my fib from kind of the high, most recent 5-minute high to the high to low. So we'd be targeting out this level right here. And I would go break even right here. So good to take this one, sell limits, auto break even at this price, which is 1.27332. 332. Which we get right there. So we're tagged in both trades now, and then we have a third trade, which we can take. And the second one isn't protected, so again, a little more risk, and up to you if you want to take these. It's obviously going to increase your profit potential pretty significantly, but we're either getting 2 or 3 wins in a row, or kind of a partial win, or kind of a combination. But if you can catch multiple trades in these trends, it can be pretty significant. So we'll go ahead and see if we can get this next one. So I'll move this over again just so we can see. I'm going to enter here on this candle close. I've got my kind of fib drawn from the most recent high to low, so we'd be targeting this low down here in this case. I'm going to use a sell limit, auto break even at this price right here, 1.27288. 288, let me just double check that. 288, yep. And we'll see if this one triggers or not. All right, so we're in all 3 trades now. The second trade is now break even. I don't know if you guys saw that, but we hit this level down here now. And now our kind of second trade has kind of triggered break even. So we are trailing this one down. Haven't quite hit. Now we've hit our break even on all 3 of these. So all 3 of these are risk free. And we can just kind of see when our take profits hits, or if or when our take profits hits. So let's play things forward and just see how it worked out. So a couple of them triggered, and the last one came back break even on us. So overall, 2 nice wins, and I think this third one ended up just being break even. Kind of came back on us. Didn't quite go to our max take profit, but yeah, pretty cool to see when you can catch multiple trades from the same trend. Can get a little confusing, but with a little practice, I think you guys will get good enough at it. And all of them were during our session, so everything kind of matched up. As you can see, if we had kind of hung on a little bit longer, we did have some chop, but eventually we did get a nice rollover back to the downside. And again, this is kind of one of those cases that since price has previously visited our area of interest, we can potentially just ride the wave down, expecting price to come to these 4-hour lower lows. So as long as we have everything that checks out, we should be good to go. I want to see us kind of reestablish a clear downtrend. We've kind of been chopping around for a little bit, so I want to see a nice clean break to the downside, which we get right there. Let's see if we get an entry off this low. Perfect. So we got a nice, very small wick into it, the green candle, followed by a nice close. So this will be a valid entry for us using our recent high to low. Our target would be down here at 2.38, and I'm actually, just for fun, we'll go ahead and target out the low for 5R potentially in this case. You could consider it more of like a swing target, but just to kind of show you guys the options you have, let's go ahead and at least give it a shot. So we do need to use a limit order because the price is a bit lower than our Heikin Ashi close. So sell limits. I'm gonna go break even at 1.26846, 846, and see how this one plays out. So unfortunately, quick loss. Got too got too cocky, and quick loss. But no, that's fine. I think we had the right idea. It just didn't play out in this case. We do have another potential trade though. Sometimes you get barely wicked out on the first one, and the second one is good. So if we get another valid sell, we could. But yeah, it's trended up too much to the upside. As you can see with this VWAP, I guess this is probably the most recent high. We had this candle closing above the midpoints, and so I wouldn't have taken the trade. So I need to see more clear kind of structural shift before, and it looks like we're kind of just trending back up now. So this next session we have shifted to the downside pretty aggressively. Super trends back to red. So we're gonna mark out failed lows, which we have right here. Don't have any inside bars, so pretty much gonna need to see price come back up here. And this could actually be a good example of when to use the go to price function. So 1.265 essentially. So if I turn this on, go to price, I've actually never used this, so this might not work. But so go to price 1.265. It might I only want to go forward one day. But yeah, so ultimately you can kind of very easily see with the FX replay, instead of having to play everything through, you can just kind of play it forward and see if it hits that price, and if not, then we don't have any trades. So we can just go to the next session. Kind of a cool feature you can use if you want. So we did have a inside bar here that we have swept the high. So we are already in an area of interest based on the 4-hour time frame. Extra confluence would be if we came back up to this other high as well, but we don't need them both necessarily. We do need to see a shift in the 5-minute though, which we eventually get right here. So as our session indicator shows up, we got a shift right here, and since we have a green, like I said, you have to see candles changing colors in order to mark out a shift, and since we had one green candle, this is valid to mark out a shift. We also have a retrace into it barely with this green candle, so if we get a red candle following this or shortly after, we could potentially enter, but I believe this would have been past our VWAP. Or actually, no, I keep thinking these trades aren't valid, but I think if we go one candle back, it did close below the midpoint, so this is a valid trade. And as we'll see, if I drag over this 4-hour level, we also have tapped into this previous 4-hour low as well. So we've got inside bar sweep and previous low, so everything is valid for this one. So using the 5-minute high to low, give us our levels. We'll enter off this retrace low. I'll kind of redraw my 5-minute low right here. We would target out down here for a potential 4-hour trade. Place the order auto break even at this level right here, 1.26325. 325, sorry. And see how this one works out. So we're chopping around. I don't really see any additional trades. Could potentially have a new low right here that I'm going to watch for. If we get a closure below it and then a reaction. But while we're in this trade, just gonna let this one kind of play out. We are out of our session now. Depending on what the kind of spreads change if you're trading CFDs. So for those of you that aren't aware of CFDs, during kind of off-market hours, the spreads increase pretty wildly. So even though you might be in pretty good profits during the core session, when the spreads increase, it could decrease your profitability pretty significantly. So probably a good rule of thumb, if it's near or close to your entry, to either put your stops break even or just honestly go ahead and close it early, rather than letting the spreads kind of impact you. So I'm just going to kind of manually move my stop break even and let this one either be a break even trade or a win, and then kind of just fast forward here and see how it would have played out. Chop, 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 and eventually stop to stop break even. So yeah, whether you closed in a little bit of profit or went break even, both are probably reasonably good enough trade management, and that's kind of good enough, I think, when you have those situations. So Still in a downtrend, still looking for shorts. Nothing has changed there. We do have a structural shift right here. It's not really a clear low. That's the only reason I don't like this. So I'm probably gonna mark out this as a potential low here if we get a nice close below it, which we get right there. Where I use this more recent low. Let's see if we get an interaction with this level, which we do. So price retraced to it with the green candle followed by red. Use the retracement as our stop. Project out the levels for a potential almost 3-hour trade. We need a limit order because price, this one, yeah, might might take off without us because price is quite a bit lower than our Heikin Ashi candle. So we'll go break even at 1.26485. 485. And this one might just kind of take off without us. Yeah. So unfortunately, did hit our take profit, but just due to the nature how the actual candle versus the Heikin Ashi candle closed, we unfortunately didn't catch this trade. So no fill on shorts. Sad. Yeah, if we did the kind of where it would close, it was only like a 1.19R trade, so probably just wouldn't have been a valid setup for us, but that's fine. We'll look for the next one. So we have another shift right here. Actually didn't quite close below it, so not the best, but see if we get another valid low right here. Okay, so we did get a nice lower low here, followed by a retracement into this level and another red candle. So we traced back to the upside, closed below it, and we have another shift right here. So using the most recent high to low, right there, targeting this for, again, almost a 3-hour trade. Place order, auto break even at this negative 0.25 level, 1.26313. See how this one plays out. So we get tagged in, and unfortunately a quick loss. And we might have another potential stab at this one. Let's just double check the VWAP. Yep, we did close below the midpoint, so let's take another shot at this one. The fib levels are the same. A little lower risk to reward, but it's at least 2-to-1, so we're good to go. Sell limits, auto break even at the same level, 26313. And unfortunately, this one ended up being break even. So 1 loss and 1 break even, but no, not too mad about that. A little bit of time left in our session. See if we get any additional trades. We do have a kind of retrace right here, and this might actually been a trade I missed. Let me just double check the VWAP. Yeah, so I think I missed this trade right here. We had a kind of candle closing right here. Would have been another loss, but I'm gonna go ahead and record it again just to make sure our analytics is accurate. Would have been a pretty aggressive move, but we are expecting price to come down, so that's fine. So I'll go ahead and replay this one to go ahead and record it. So as this trade went here, our retracement high was all the way up here. So place order. I know this is going to be a loss, so I'm not going to worry about the auto break even or anything else. All right, just so we have accurate analytics. And again, probably going to need to see. Yeah, I think we could probably still take another. Actually, no. At this point, we would probably want to move. All right, yeah. So this would have been valid still. I probably should have done my projection for this second trade off of this kind of most recent high to low right here instead. Now that I'm looking at it, so wouldn't have impacted the result at all because we did still get a closure, but it makes this kind of second trade a little lower probability since I guess technically we have a doji here. So if we're ignoring dojis, we're using the most recent low, I think we would have another potential trade here. I know we've already kind of had a missed trade, a loss, a break-even trade, loss. It feels like probably a pretty bad day, but we're gonna go ahead and give this one a shot just to see how it plays out with the rules. He didn't give like a strict number of losses per day. Maybe you stop after 2 losses just to kind of preserve your capital, but otherwise we'll go ahead and at least give this one a shot. So same projection levels. Gonna look at this targeting the low down here. And actually in this case we don't have a 2-to-1, so that's the reason we wouldn't have taken this second trade. The first one did give us over 2 RVL. We wouldn't have taken the second one because it wasn't 2 to 1. So all that done, all that said and done, let's see, we do have another shift right here. By the time it closed below, we got a pretty strong shift to the upside, so that's probably it for this day. Holy inside bars. We have 2 inside bars here, so we can mark out these potential highs as additional confluences. And again, I like to make these dotted just to kind of differentiate them. So we have that one, and we also have this one, which has already actually been swept. And just a quick tip: if you hold the shift key down, it lets you draw them like perfectly horizontal. I don't have like perfect hand control or mouse control. It's just I just use the shortcuts. So we did already sweep this one right here. So I'm actually going to delete this. Or yeah, since we've already swept it, we're good to look for shorts anywhere in this because we've already kind of come back above these lows. But sweeping this recent inside bar gives us a little extra confluence. What news do we have? So we've got CPI and Powell's speech. So this day is going to be super volatile. May not meet the criteria for our model. So CPI is pretty volatile. Don't have any shifts to the downside yet. We're coming up on Powell's speech. I really don't want to look for trades right before FOMC. So probably honestly just no trades on this day for that reason. We did eventually trend to the downside, but I'd rather be safe than sorry. Actually, I don't know if this was CPI or not, or sorry, FOMC. Might have just been in like a speech somewhere else, so maybe not as volatile as FOMC. Let me just make sure I didn't miss anything. So we got a body close here, kind of a doji candle with this first candle, but then potential valid entry here. Let's see where our VWAP would have been. It did close below the VWAP midpoints, so I think we would have been fine entering this one in hindsight. 4.34R. So let me go ahead and record this one just so we kind of see how it played out. I think we would have been break even at this point. So it's either going to be a break even trade or a win. All right, so we're entering here, place order. It's pretty much a market order because the current price is like right where the Heikin closed. So auto break even at this level here, 1.26289. Play it out. So we break even now, and eventually Randor take profit. So yeah, good to distinguish between like Powell sometimes has like random speeches or he speaks in front of Congress or the Senate, and those are usually a lot less impactful than like FOMC. So sometimes I think it's good to make sure and like make that differentiation because it can make a big difference and allowed us to hop in and win here versus just like totally avoiding a super high impactful one. But I think it's good we skipped CPI obviously because that's super volatile. And yeah, I don't think we missed any additional trades, so that's probably it for this day. So let's see. That's probably good enough. I think I've shown you guys quite a bit, and we'll take a look at the analytics. So overall, honestly, a pretty low win rate. I did try to make sure and take away the trades that we shouldn't have taken, which were like right around the 4-hour point of interest. We do have a pretty high average risk to reward of 3.75. So technically in, what do we have? March 7th to the end of the month. So like about 3 weeks or so, we got about 6.3R or so. So it is a profitable strategy during this period, but I would say, you know, definitely a little lower on the win rates than I would like. Potentially could be something that if you test over a larger sample size, maybe you can see a slightly higher win rate, or maybe you can look for additional confluences that kind of support the trade. But overall, just using kind of what I learned from his strategy, it is, you know, does seem to be profitable. Could potentially help you pass prop firm challenges, but it is quite complicated, and for that reason, you know, may or may not be something that you want to trade. But it is cool to test out the Heikin Ashi candles, get a little familiar with those, and kind of see how they work. But yeah, overall, I hope you guys got a lot of value out of this, and I'll catch you guys on the next one. See you later.